Hello again, everyone. Welcome to another update on my swing trading. Just want to go over what's been happening and how I have been making additional entries to the current trade. So let me just jump real quick to the monthly time frame, and you will see here on the monthly time frame, it's clearly making higher lows, higher highs. Okay, higher lows, higher highs. So what that simply means is that the NASDAQ 100 is consistently bullish, bullish instrument, which means I'm only taking my higher lows and buying, and buying and exiting on my higher highs. Okay, so that's my monthly. Look at my weekly. You will see here that the weekly actually is making higher lows, higher highs. It made a higher low back on the week of August 5th, and it has been buying since. It's currently at a lower high. Doesn't necessarily mean that you're going to get a retracement from here. What we can actually do is to see when was the first week that actually created that lower high, and that was probably about 4 weeks behind. We can actually go back and check some more. If we put this cursor here, we'll see that the first week that the lower high was created was the week of September 23rd. Okay, now what it has done is that it has consistently pushed up since September. Okay, this is where we're at right now. Okay, now what that means is that the trend, the bullish trend, is still strong. So in order to trade that, you're basically going to be trading higher lows, higher highs until you get to your higher highs. Then you start looking for sells, and then those sells will go down towards your biggest higher low. So this is on the weekly. On the daily, we'll see that it has created a segmented high, which is essentially a lower high. However, we still have to bear in mind that anything below the weekly and the monthly needs to sell from a higher high point. Okay, so that's one of the things that we're looking at. So if I jump down to, let's say, for example, my 4-hour time frame. Okay, on my 4-hour time frame, I clearly see that I'm making higher lows, higher highs. Okay, higher lows, higher highs. Now, what does this mean for me? Basically, in order for me to take my buys, I want to make sure that I enter on my biggest higher low. Okay, so let's go and look. Today I actually took a trade, and I took a trade based on the fact that the H11, the 11-hour time frame actually finished at a higher low. I was actually able to get in for that buy just before close of business today, close of today's session. So I'm actually in the buy. I actually have another entry, which I'm actually riding towards my ultimate take profit, and I'll show that to you in a little bit. Okay, so let's look. So this is the day. We see that the day actually started selling. It got some rejection, as you can see from this wick right here, because the market is now closed. What does this rejection represent? Well, let's look at the smaller time frame. So that's the day. So I'm on my 23-hour time frame. Still, I have more rejection there. I'm on my 22. I have more rejection, and also I actually have a small doji, or a small doji that actually finished the session. This was actually the 3 p.m. candle, which actually closed with some amount of exhaustion that we see here. All right, so let's look at the 21-hour. Similar situation. We see that wick right there. 20-hour, same scenario. So the idea is that what I want to see is I actually see that all my bigger time frames are making higher lows, higher highs. So I want to make sure that I'm getting in at the right point, okay? It doesn't make sense for me to actually try to get in for a buy when the price is here, because this is at a high point. This is at one of the highest points in the current move. So I want to wait for that retracement. So I'm now on my 15-hour. Still nothing. It's still making higher lows, higher highs. That's all I can see on my screen here. Higher lows, higher highs, higher lows, higher highs. On my 14-hour, same scenario. 13-hour, same scenario. 12-hour, same scenario. When I get to my 11-hour, this is what I actually see on my 11-hour. I see here today that the 11-hour, the last candle of the day in the 11-hour, which was the 3 p.m. candle, actually formed a higher low, okay? And if I look at my trend, I see that my trend is higher low, higher high, higher low, higher high. So naturally, the market is still in trend. Okay, let's go down to some smaller time frames. The 10-hour, similar scenario. The 9-hour, similar scenario. 8-hour, similar scenario. 7-hour, similar scenario. 6-hour, similar scenario. 5-hour, similar scenario. 4-hour, similar scenario. 3-hour, similar scenario. Now, on the 4-hour, although you notice that this says high, it's an overbought high. However, if you look at this new high versus the last new high, you see that it's actually forming higher. So essentially, you have higher lows, higher highs, higher lows, higher highs. Look at the 2-hour. Last high that made was a higher high. It came down, it made a new low today. However, this new low only broke a previous higher low. So it's still making higher lows, higher highs. And also, when you look at this, you see that it's an oversold low. Down to my 1-hour, I see the same thing. Okay, it's coming from a higher high, but we have a segmented low, which means this low is a higher low. It broke a higher low, previous higher low to form this new low. When I look at this new low in relation to the last new low, it's higher. So it's still making higher lows, higher highs. So if you look at all my highs are falling higher, and my lows are also falling higher. So we have a higher low, higher high situation. Okay. So that is basically why I am still in the trade for buys. I keep adding buys each time I get a higher low position. Okay, I want to make sure that's my biggest higher low before I actually take a trade. Now, if you zone out for a little bit, let's go to a bigger time frame like the 4-hour, for example. Okay, you see exactly what I'm talking about here. All my lows are falling higher. Okay, this one came down, it fell here. However, it's still higher than previous lows. So it's still making higher lows, higher highs. And the reason why this low actually fell here was because this was not the biggest time frame that actually made this low. Now, let's prove it. Let's check it. So let's bring my cursor here. Okay, that's the low that formed on the 4-hour. Let's look at a bigger time frame. There we go. On the 5-hour, there you go. You have a lower low on the 5-hour. Let's go all the way up. See, you have lower lows right here. On your daily, you actually have a low. So in fact, like I mentioned to you, the 4-hour time frame, this was not the biggest low. Okay, so that's one of the reasons why the low actually kept pushing down, because it needed to form the bigger higher lows. Remember, I said you want to make sure that you're taking your biggest higher lows, trading them to your higher highs. So the day we saw was at a low. Okay, let's look at a bigger time frame like the weekly. Here we go. Here's your confirmation right here. Your biggest time frame making a higher low was the weekly. Because if you check the monthly, you'll notice that the monthly was not at a higher low. The monthly is still sitting at a higher high. And the weekly is still, sorry, the weekly only made a higher low and it bought from here. Okay, let's check. So we play, see what happens. it just kept pushing up. All right, with all the retracement, it just kept pushing up, and this is where we are right now. Okay, so that is basically how I take my trades to ensure that I'm trading with the trend. I want to make sure that I'm trading easy. I'm not interested in necessarily taking the sells. I want to make sure that I'm constantly taking only my buys. I'm waiting for my biggest higher lows so I can get back in to get a trend entry to continue with my buys. So I hope this video is helpful. When I have more time, I will try as much as possible to post additional videos. So thanks again for watching, and I'll see you next time.